Hi everyone, how's it going? Joshua Bunker here from Guerrilla Trading. Hope you're all having a fantastic week. So guys, as we can see, the community is growing at such a rapid speed. And what I love about our community is that everyone is so willing to help each other. I'm seeing a lot more people getting involved in the community. And as I've said on previous recaps or on my forecasting videos, that please guys, understand that trading can be a very lonely business. And obviously when you're trading, you don't have many like-minded people around you, because most people, when you talk about trading that don't understand it, they will call you a gambler. They will call you all these names under the sun, right? Because they don't understand it. And especially some people that are trading that have strict parents, right? They expect you to go to university. They expect you to go to college, right? And you're now telling them that you want to be a trader. You're going to face a lot of difficult questions, and to try and reason to people that don't understand how trading is quite difficult. Now, the reason I say this is I spoke to someone this week and they've obviously told me about the challenges they've had with their parents who are very strict and expect them to become doctors or engineers, and they've gone down the path now of trading, right? Now, one thing I want to say, guys, is please, right, use the community, because everyone in the community is on the same journey. We're all like-minded and we're all there to encourage each other to do better, right? And that's why I believe so many people in our community are seeing such rapid improvement in their trading and seeing progression at some rapid speeds, because I do believe it's all down to the community. Because if you look on the community, anyone that posts, you've always got so many people contributing and asking to help you, right? Giving you them answers that you're looking for. Now, obviously with our community, we have over half of our community that is funded, proving that they're consistently profitable month on month, okay? So take advantage of that. Anyone that is new, don't be afraid to come out of your comfort zone and ask questions, because trust me, guys, there is never a silly question. People will always be there to help you. And that is how you improve and become better, right? We've also, as you know, got the interactive back testing, which for me, I think is one of the best things that we do in the community, because what you do there, guys, is you're learning from other experienced traders. We have so many now in our community that all you need to do is go through their charts, right? Go through the interactive back testing, read their comments, right? Because there may be someone that trades like you and thinks like you, right? Because as you know, everyone within the community has different backgrounds. Everyone in the community has different experience in trading, and everyone in the community also looks at the market slightly different. So where you may resonate with someone else, and someone else may resonate with someone else, right? Because there's so many opinions there. You might say, well, I like the way this guy trades. He trades very similar to how I would like to trade. And then what you do is you read his comments. You understand the thought process that he has behind that month of data in the interactive backtesting. And this is going to really help catapult you to that next level, because when you have people in the community that are already consistently profitable month on month, and you can then sit over their shoulder in a sense and look at their trades, that is priceless. There is nowhere else that I know that does that, where you can physically look at majority of people in the community that are consistently profitable and actually get knowledge from them. Because what you'll do is you'll backtest the pair and say, for example, you make 10% for that month, right? You then go through all the comments, and there may be people that have made 20, people that have made 25, right? Someone else that's made 15. You might say, well, what are they doing that I'm not doing, right? And what this is letting you do now is that you're searching for the answer. And because you're searching for the answer, you're going to learn a lot quicker, right? Because someone's not telling you, you're actually searching for it. And what that will do is that will make your subconscious understand that, well, hold on, there are people in the community that are proving every single month consistency, right? And then what that does is it smashes all them limited beliefs, because now you think, well, if he can do it, I can do it. And then what do? Well, then what you do is you gain that knowledge from that person. You understand his thought processes. And then what you do is you back test again that month. And what happens? Rather than making 10%, you've made 20 or 25%. And you're like, oh my God, like, I can't believe I've just gone from 10 to 25, because all I've done is look at something differently, right? And it could be based on price action, why someone is in a trade and why someone is not. Is it an average trade? Is that person only taking the high probability trades, right? And not taking these average trades. And you realize, well, I was taking all the average trades. Now, if I cut that out and do what this guy is doing and only trade the high probability, I've actually made 20, 25%, right? And what you do then is you can say, right, well, the next month that I do, I'm going to trade it the same way. And the results will improve. And this is what interactive backtesting is all about. It's about you learning from other people, learning from other people's experiences. Because again, as I've said, many people have different experiences in the market, right? Everyone trades slightly different, right? We all know the bunker bomb. We all know the bullet, right? But we, as our personality types, decide how we want to trade them. If we want to trade them regularly, if we don't. If we want to take average trades, if we don't. There are many different aspects of it, and this will all come down to your backtesting and how you feel comfortable trading. For example, there may be a guy in the interactive backtesting that has a 10 pip stop loss, right? Now that guy may make 30% a month, but actually he's taking twice as many losses than another guy that's making 20%, right? So it boils down to, okay, that next guy actually has a 20 pip stop. So how do you weigh this up? Well, do I mind taking multiple losses knowing eventually I'm going to make more percentages, right? Or is my personality type, I would prefer to have a wider stop loss, take less losses, but actually take less percentage. So again, all these different factors come in, and it comes down to your own personality, how you like to trade, right? Because you may not be willing and may feel stressed trading with a 10 pip stop loss, right? So then widen it to 15, widen it to 20, and backtest it that way, and decide to yourself, well, I feel more comfortable with a 15 than I do with a 10, right? And again, you're only going to know this when you do your back testing. And this is the key thing. And one thing that we always promote in Guerrilla trading is back testing, back testing, back testing. Why is that? Because not only is it proving to yourself that the strategy works, but you're proving to your subconscious mind. Your subconscious sees it and sees physically how much percentage you're making month on month. Now, do you think your subconscious is going to second guess when you get into trades? No. Why? Because you have your trade plan that you've back tested and you've proved to yourself every month I can make 30%. So every month, if I'm making 30% and I start taking 2 losses, am I going to be bothered? Is my subconscious going to tell me, don't take the next trade? No, you won't be hesitant. Why? Because you have already seen that in your back test, and sometimes you do get multiple losses. But at the end of the month, you're up, right? You've seen that consistency, and your subconscious will not bother nagging you, because you have to understand that trading is mainly psychology. It's you battling you, right? And this is where I say with some people, they say that they've done this, they've done that. And if you tell people you've done something you haven't done, you're not cheating anyone but yourself. So just understand, put in that hard work. Understand the more effort and time that you put into something, the more you're going to get out of it. It's like any skill, right? The more practice you do, you become better at it. You improve, right? And to get to a point where you've mastered it, you have to have practiced a hell of a lot. And the same basis with trading, okay? One thing I also want to say is about volatility, understanding that, yes, we had news this week, okay? We all saw the news and we saw the volatility. But imagine if you didn't know about the news. Could you not look at the market and see that? Yes, you can. And I'm going to show you today, obviously, signs of seeing volatility. For anyone that's new, that obviously we have to understand that we are price action traders. Price action determines whether we trade or not. And this is what's key. This is why we can trade in a range bound market or a corrective market or an impulsive market or any kind of market we can trade in. Why? Because we can read the language of the market, which is price action. And once you learn to read price action, you don't need anything else, right? Because you will see the market so clearly. And this is the great blessing that we had on April, right? I've spoke to multiple people this week and last week, and they've said to me, it was a blessing in disguise. I've never learned to be patient as I have now because of April. So I'm not getting FOMO and I'm not getting that fear of missing out or hesitation because I'm happy to wait when I see volatility. And this is amazing. This is a real sign of a professional trader. So I'm really proud of all you guys. It just goes to show that sometimes these sort of times like a pandemic is a blessing in disguise, because now it's made you the trader that you are. It's going to shape you to become even better and understanding how to read the market. Now, just one more quick thing I wanted to talk about was they're having an Aussie meetup on the 18th of June. Okay, anyone that wants to join, please jump on there and join with them, because this is it. It's all about meeting like-minded people. Okay, obviously depending on your time zone, but if anyone does want to join, go into the student meetup and there is a post on there which gives you the time and obviously the link to that session. And these are the sort of things that I love, right? People going out and making that effort to do these meetups, these student meetups, to help other people and to also learn from each other, because that's what it's about, right? Sharing and bouncing ideas off each other. Because you may go to this V meetup or Aussie meetup and all of a sudden, right, someone says one thing, right? Just one thing that makes all the difference to your trading, that gets you from making 5 to 10% a month to 20% a month. Just one thing. And all of a sudden it just clicks. And it happens just like that, right? And then it changes everything. We've all had them aha moments, right? We've all been there and done it. So guys, please, I want to see as many people as possible approaching these sort of V meetups or these meetups that people are holding, because it's only going to improve you. Well, if not improve you, it's only going to inspire you, because you're going to see many people in the same position you're in, right? You're all striving to go for that goal of full-time trading. Now, on the note of full-time trading, I've had 6 people message me privately this week saying that they have gone full-time trading. So you guys know who you are. I want to say a massive congratulations to you guys. It's absolutely amazing. And this has been the goal, right, from the very beginning. Is that what we want in Guerrilla is to have the most consistently profitable traders within our community. We're already proving that, right? Over half are already doing that. And majority of the other half are quite new, right? So it's just proving that you are actually putting in that hard work and you are showing everyone how to trade. And it's amazing. I'm literally blown away, and I couldn't be more thankful to be part of this community. I also want to say a massive congratulations to obviously those guys that have gone full-time, and understanding, guys, that this is what you aspire to be, right? And understand that once you get to that full-time status, is what we all understand is what everyone's achieving and everyone's trying to strive to be. But please, one note I want to say to you guys that are going full-time, make sure that you have a strict routine and time block your day. Because it's very easy for you to, once you become full-time, think that you're already there, right? An example for this is like saying a sports Olympian. Once you get into the Olympics, that doesn't mean you can just stop training, right? In other words, when you get into the Olympics, it means you should be training more, right? So when you get to that full-time status, it means that you should be doing more, right? Not less, because it's human nature, right? You believe that you've got to a stage where you are now full-time, so I can take the foot off the gas. It's natural. It's no one's fault. It's just natural as a human. So I just want you guys to really take that example of an Olympian and understand that you got there now, but you have to stay there. And I don't want you to get that foot off the gas, jumping out of bed now at 9, 10 in the morning rather than getting up early. Okay? So guys, just want to get into this recap now, show you exactly what I'm looking at, how the market's setting up, and anything that I'm currently in or looking at, okay? Because the main reason that I do these recaps is for you guys to really understand the thought processes, and also to show you complete transparency. I show you all my wins. I show you all my losses. Why? Because if I'm showing you my losses, you're not afraid to take losses, because you understand that losses is part of the probability. And you understand that, well, Josh don't care. Why should I? Right? And it's the true fact. I don't care about losses. Why? Because they will always be there. All that we know is that if we follow our plan and follow our strategy, that we will gain more profit than we will losses. That's 100% guarantee. Okay? So here is the euro US dollar. As we can see, guys, price action, as I said, come up here. We then came down. We saw this push here, okay, if I zoom in a bit, because this is the big thing, right? And one of the most important things is that we are price action traders, okay? So what we want to do is we want to really investigate price action. And as I stated, is we had this high here, right? And what we would expect is an impulse to continue. But rather than that, we had a large wick, then we had a counter trend move that then broke the low and retraced, right? So again, like I stated before, this gives us a key warning sign that we are going to be corrective. If we break a high, retrace, break a low, retrace, it gives us a massive warning sign that we're going to be sideways, right? And as you can see, right, we knew that from this point, right? And what happened? We just became corrective, right? So this is the key thing about really understanding price action and understanding how to look at it to give us this information. Now, as you can see, once we broke this low again, we retraced. So you can see also we've become descending, right? And then from the low, we have the most recent high. We broke that, retraced, broke that, retraced, broke that, retraced. So again, we've gone from a descending to an ascending, right? Giving us again another clear warning sign in price action that there's no momentum to the downside or to the upside. It's tried breaking lows, couldn't be sustained. It's tried breaking highs, couldn't be sustained. Now we know from this sort of price action also that we're likely to be corrected. Okay, so we've got these warning signs that are telling us that we don't want to get involved in the market, that we want to stay patient. Okay, and then obviously we saw this news come out and you can see what happened. We got this large wick at the bottom, got this large wick at the top, right? Again, if we just look at that single candle for price action, what's happened in this candle? Well, we broke the low, retraced, broke the high, retraced. Is there, in your opinion, any sign of momentum to the upside or to the downside? No. And I'm hoping that the more and more you guys are seeing these recaps, that you really get to understand price action is giving us warning signs that we're going to be corrective. So as soon as that candle's closed, right, we already got that information that this was going to happen. So we're going to stay clear of that market. We're not going to get involved in massive ranges. Now, also, what is this telling us? So say, for example, we didn't know about the news, right? Because we don't have to really know about the news because we're trading price action, okay? Price action gives us that information. Now, one candle that has shot up this amount, but it's given us these large wicks. Has that not given us information that we are very volatile at that point, right? Because once I saw that candle, whether I knew there was news or not, I would be saying to myself, I am not getting involved in any price action after that candle. Why? Because that candle has given me the warning sign that volatility has come back in. And we knew it was because obviously it was news. The news created that volatility. And then obviously with the wick each side, it's given me the information that this was going to happen. So I'm hoping that most people within the community didn't get involved in any of this sort of price action. We had the warning sign here. We then had another warning sign here, right? So I'm just hoping that all of you that are looking at this price action didn't get involved, right? And then if that is true, then you're developing that price action skill, right? You're seeing the market for what it is. And this is the key thing about our trading strategy is that we don't have to rush the process. If the market is not ready, we don't trade, right? I understand that some people are very new or inexperienced, or not even inexperienced, some experienced people too, find it very difficult to have patience and sit on your hands, right? But April was a key lesson for most people in our community that actually saw why we don't trade volatility. Because you can't trade the market the same way when the market's volatile, because all you're going to get is consistent losses because the market is not showing any sort of consistency. It's just showing erratic behavior. Now, if something's erratic, do you think you're going to be able to take advantage of that? Most of the time, not, right? Think about a car. If you're driving it on ice and it loses control, how hard is it for you to steer that car? It's very, very difficult, right? And it's the same with the market. If the market doesn't give us that clear, clean road, that clear grip on the road, are we going to be able to steer it properly? No. So that's just a little example of why we don't trade volatility. Okay, and the more and more you develop your skill with price action, you will understand this more and more. Okay, so currently what we're looking at price action, I've seen these large wicks on each side. Now, when I see this on the market, based on my experience, you normally see a large range, right? We knew that, and it started to do that. So you see, we have a descending, have an ascending, and it will probably continue like this for the rest of the week, and maybe even Monday, right? Because the market hasn't made a decision whether it wants to go up or down. It's tried going down, and they said, no, we're going up. Tried to go up, no, we're going down, right? It's given us the warning sign that there is no sort of interest up or down. So what happens then? Well, the market goes sideways. Okay, so at the moment, I'm going to stay very patient with this pair, and I'm not going to be trading it unless I see a sort of descending nature here and a nice push, and then a nice continuation bunker bomb. Why? Because volatility is back, and I'm only looking for a descending nature and then a nice push, as you can see above this most recent high here. So obviously this is a little descending, and sometimes this is what happens, right? It's inside the range. So the information is, it's very clear what happens. And the reason that I say this is because sometimes the range can keep ranging. So for example, in here, we could just keep seeing a range, right? But that range is not important until we break the most recent high or low. And how do we break it? Okay, so for example, if we had this descending nature and we say, right, well, it's just continuing with this pattern, right? But if then from here we break that high, we know it's come from a descending nature within that range. Now I'm looking at this as a high probability trade, right? So what do I need to look for? Well, what's going to happen next after the impulse? Are we going to see a continuation bunker bomb? If that's the case, I'm happy to take that. Why? It's high probability. It's come from a descending nature. Okay? Or are we going to see an ascending nature? Okay? What happens after the impulse? If we start seeing an impulse and then an ascending nature, we don't want to get involved in that. We just want to wait patiently to see what happens next. Will the market drop down and then give us a continuation? If that's the case, I'll be involved in that. Why? Because it's high probability. It's come from an ascending nature. Okay, so we have to understand when we start seeing volatility, and I know that it was from the news, but for me, I don't care about the news. I don't care about anything. All I care about is price action. Now, if price action shows me volatility, I'm going to stay on the sidelines and only trade the high probability trades. Now, as you can see, we could have an ascending nature and then a drop, right? Same thing. If it's come from an ascending nature, we broke this low impulsively, I'll be looking to take a continuation bunker bomb down, right? And again, I will be waiting patiently because I know what to expect through seeing these large wicks. So for me, I will not be looking to get involved. For example, if we see the market pop up here, pull back and go, right? That's the bullet trade. But why would I not be interested in that? Well, because it's not high probability. And quite easily, with the market with large wicks like that, it could come up and start ascending and then descending, right? We know the market's going to be range bound. So for me on this pair, I'm going to wait patiently to see a nice push in either direction, okay? The only other time that I may take a bullet will be if we start descending, right? And seeing a nice clear descending nature, right? And then what I would like to see is the most recent high here, broken, pull back to, and then go, right? But again, understanding that I'll be well aware of volatility. If, for example, we're breaking these lows, there's large wicks here, we break the high, we get a large wick. Again, this will not be valid for me. I will only be taking a bullet trade if I see clean price action. Why is that? Because I'm seeing volatility in the market. And I'm happy to wait on the sidelines for me to see some more nice, clean and clear price action, right? Because we are still in this pandemic. There are still troubles in the world, right? So obviously the market reflects that. The market will obviously show us volatility because there's going to be certain things that come out that is going to strike the world, right? That's going to have these news reports, and we're going to now be able to see that in the market, right? And that's what's the key thing about reading price action. Most people that trade with, for example, indicators, they're trading based on an indicator and they don't care about these large wicks, right? They might say, right, this is part of my strategy, but they're not looking at price action. They're just looking at an indicator when it goes up or down. And they're saying, right, I'll sell here because the indicator tells me to sell, right? And that's not the way we trade. We take our information from the language of the market and then we get involved in it. Okay, so just be extra careful with this pair, guys. I will personally be waiting to see some clear price action. Okay, so that's the euro. Next pair is the US dollar, Japanese yen. And as you can see, right, markets have come down. And since they've come down, what do we notice? What's the first thing that we see, right? The market is looking very descending, right? How do we know that? Well, we look at the lows. The lows are being broken, retraced. The next low is being broken, retraced. Next low is being broken, retraced. Broken, retraced, broken, retraced. It's showing us a clear descending nature, right? Now with this pair, as I've stated before, I only trade the bond with this pair, okay? The bond with this pair, I only trade. Why is that? Because with this pair, it's predominantly corrected, a bit like the CAD pairs, right? If I know that it's quite a corrective pair, then I want to see an impulse first. I want to see some sort of commitment from the market. I want the market to commit to a direction. And once it's committed to that direction, then I want to see a continuation bunker bond, which confirms that we're getting a continuation of that momentum or the trend, right? So as you can see, the market is descending here. So what do I expect? Well, I know that at the minute I'm only really looking for high probability trades. Well, I'll only look for a nice push up and a continuation bunker bond, right? That's all I'm really looking for at the minute, right? But again, we don't know what the market has to offer. Quite easily, we could just start getting an ascending nature here, right? So we know now that we've had this ascending nature that has come from a descending nature. We know that it's quite common that this is going to break the low and then just start descending and create a larger range. We know that, right? It's in the back of our minds. But also, if we had a descending, then an ascending, and we get a large impulse down, right? I'm happy to take that all day long. Why? Because it's high probability. We're looking at current price action. Yes, we know that it could have formed a larger sort of range, but we've seen now the market's impulse past that low. So if it's impulsed past that low, then we're happy to take the continuation of that trend, right? We've seen the commitment from that impulse. So I'm happy to get involved in that, understanding that it's high probability and also understanding that it's only 1% risk, right? We've got a high chance that that's going to play out because it's high probability, but yet we are low risk traders. Okay. Now, what could easily happen also is price action could just shoot down, right? Now, this could happen quite easily. But for me, at the moment, I'm only waiting for high probability trades. So that will not be viable on this pair. Whereas I know with the euro, okay, or the euro Japanese yen, that sometimes we get this descending nature and then an impulse. I'm happy to take it. But with this pair, it's not one of those pairs. Now, if anyone's new and doesn't understand what I just said there, I will explain it when I do the euro Japanese yen, okay? Because I have to understand that there are new people coming to the community and maybe I say things that you may not understand, and I do apologize for that. And I will go over that when we get to the euro Japanese yen pair. So what happens here? So once we get this impulse down, right? For me, I'm not interested in taking a trade if it's counter trend. But what else can happen? Well, what happens after an impulse? Quite easily, we can start descending and then push up, right? And if that's the case, then I'm happy to take this trade. Why is that? Because as you can see, the market's come down impulsive. We've then had a descending nature. We've then had a break of that high, which has been an impulse, right? Showing commitment in that direction. Then we've got a continuation of that trend. I will be happy to take that because it's from a descending nature. What I won't be happy to take and won't be taking is if we get an impulse down and a continuation bunker bond. Why is that? Because it's not high probability. Okay, it's still an average trade and it can play out. But for me, I like to see it come from a descending or ascending nature. And as you can see, the nature of the market at the moment is descending. So that for me is not a high probability trade. Okay, so that's currently what I'm looking for on this pair. Next pair is the Aussie US dollar, right? And this pair, as I've stated, if any of you look back at my recaps, you can see that this price action on this pair, right? And if you go back and look at the beginning of the year, right, this has probably been one of my favorite pairs to trade, right? It's given us so much opportunity, especially with the bullet, right? But the key thing is, just because it's given us so much opportunity in the past doesn't mean that we should just be trading it willy-nilly, right? We need to trade it based on price action, right? And what is price action showing us? Well, as you can see, this whole bit of price action here has just been sideways ranging. Now, we've known that. Why? Because we're breaking highs, retracing, right? We're then coming down, creating a range, breaking highs, retracing, okay? Then as we've come down, you can see we have this sort of volatility. We then had a low break and a retrace. So we've gone from an ascending to a descending. We know it's likely to create a bigger range, okay? Now, as we've come down, we see large wicks. We then see price action just range up here, large wick, right? Come down, break the low, retrace, break the low, retrace. Not only, right, did we break the low and retrace, but if we're actually looking at current price action, right, we can clearly see that there's no momentum in that market. If you look at this price action from the top, from this one move down, do you think, right, based on your experiences, that that looks like there's momentum, right? And anyone that's more experienced in our community will say no, right? Why is that? Well, not only have we had large wicks here, again, giving us very indecision markets that's volatile, right? But what's happened when we broke the low? We've retraced. What's that telling us? That the market's tried to go down, then it's pulled back up, right? Now look at this. This is the last low, right? That market has then broke down, and then we've had large wicks at the bottom, right? Not only that, but we've got a low here, a pullback, break the low, pullback, right? And then if we go back up and see that this is the high, we've then had large wicks again. This is a telltale sign with price action that we do not want to get involved in that, right? And this is it. This is what's key about these sort of times, is that we're looking at price action. We don't have a stagnant sort of setup. For example, in a sense that we don't follow an indicator. When it gets to a certain level, we have to trade it. We're looking at price action to gauge whether we want to be in this market. And as I've stated, this is probably one of my favorite pairs, but I haven't traded it for a while because price action has given me that information that I need to give me that I don't want to get involved in it, right? And I will get involved in it as soon as the market starts giving me some clear direction and nice price action, right? So as you can see at the bottom here now, we can see that price has broke this low, retraced, right? And then we broke the low again. And obviously if this candle stays and doesn't break this low, it will be retracing, showing us that we're descending, right? And that we're more likely to go up. And I believe we'll probably come up into this large range, right? So we go from a descending, so we had an ascending to a descending here. We then had a push that carried on with this descending nature. So I do think that we're just going to carry on with this range, right? But what is really good about this sort of price action, okay? It's just a bit of my experience that I wanted to share with you guys, is when you see price action that's very sideways, right? When I see that, especially on this pair, it gives me information that says that soon we are going to see a very large trend, okay? Now, obviously, we don't know which direction that's going to be in. We just wait for price action and the market to show us, and we get involved in it. So one thing I will say, especially with the Aussie, is just stay extra focused on it, because I do believe very soon we're going to see some big moves on that pair, right? That's just based on my experience. So that's just one thing I wanted to share with you guys, that I do believe that this pair is going to move, okay? So just be extremely prepared with this pair. So what can happen next? Well, we can see we're on this descending nature, right? Now, from a descending nature, I'm very happy to take if we get a large impulse and a continuation bunker bomb, right? I'm very happy to take that. Now, I'm also very happy to take a bullet as long as we get a clean break. So say, for example, this is how the market is and we get a break above this high, right? As long as it's a clean break and don't see wicks like this or this, right? Then I'm happy to take it here, knowing that price action is going to be the beginning of a trend. We've seen the descending nature. We know that price action needs to go up, or that majority of the time it will go up. So then what we need to do is understand that if we break that high and we get a nice break, clean price action and a pullback to this area, then I'll be happy to take that. Now, one other thing that I will be happy to take is sometimes we get an impulse, right? And then what happens is we get a pullback up, and then a nice combination. So it's a bunker bomb / bullet. And it's normally a larger sort of correction. So it will be a little bit larger than the usual one. Now, again, I'll be happy to take that because it's a combination of the two. But again, understanding what is price action telling me. Because if price action is looking pretty corrective, I probably won't take it. Okay? Because quite easily, price action could break here, retrace, and just start ascending. Right? Now, because we've come from a descending nature to an ascending nature, we know that it's more likely to just create a larger range. And again, for me, I will do what I've done with this pair for the last few weeks. Just stay patient, right? We know that this pair will give us so much opportunity that we just have to be patient with it. Okay, so that's currently what I'm looking for on this. I do believe that maybe we will just continue to create this descending. And if that's the case, then what I'll do is stay patient and see what happens after that. Are we going to get a nice push of this high and a continuation bunker bomb? Again, it's high probability. I will take that. Or are we going to get a nice break, pull back to that level and then go? Again, high probability. I will take that. Or are we going to break that high, retrace, and become ascending? Right? It could do any of those. Again, we don't know what the market wants to do, but we have to be prepared and we have to forecast for all these scenarios, because when they do happen, we'll be ready for them. We won't have any hesitation. Okay, so that's currently what I'm looking for on the Aussie. As you can see, right, I was asked about this position here. Someone that was new to the community asked me if this was a bullet, right? And most people that are in the community will realize that that was not a bullet to sell. Why? Because as we come down here, guys, we had this low and we had a pullback, right? As we then broke this low, this is now the most recent high. Excuse me. So once we break that high, we're now on an uptrend, right? We know because it's a descending nature, we're more likely to go up. So anyone that was thinking that was a sell, you have to be more in depth and look at price action. Price action is showing us a descending nature. It's then had a trend change. It then went up. Okay, so I did get that question. I know it's from someone that's very new to the community, but I just wanted to go over that in case anyone else was looking at the same thing that is also new. Okay, so I'll also look to see price action. As you can see, could quite easily drop down here and create a nice bunker bomb. For me, I will not be taking that again because it's not high probability. You can see we've come from a descending nature. Okay, so that's currently what I'm looking for on the Aussie. Next pair I'm looking at is the US dollar CAD. And as you can see, right, it's even moved since I last looked. The markets are on the move, right? As you can see, we're starting to see, right, some movement. But again, this is not impulsive at all, right? Why is it not impulsive? Well, if we just look at price action, right, and look at where the most recent low was. The low was here, right? We obviously had this volatility. You see the large wicks on each side. Where was the most recent high from here? Well, as we broke that low, we then go back up. We see it here, right? So once we broke that high, we retraced. Broke the high, retraced, showing an ascending nature. Right, we popped up a little bit, but again, seeing very small candles, right? Low momentum. We then pulled back. Broke that high, retraced, right? Now we are breaking the highs again, right? But if we're looking at momentum, that whole move here is ascending, right? So this move now as we can see, has broke up. But what do we understand about this? What do we look at? Well, at the moment, we've had a break of the high. We've had a large wick on a CAD pair, which we know if we get wicks, predominantly all the CAD pairs are very corrective. Now, we know if we get wicks on these pairs, it gives us that information that we're more likely to stay corrective or be range bound. Now, as you can see, this candle has not taken out the previous candle's high. So if this doesn't take it out, it's shown us that we broke the high, retraced, right? Now, what I'll be looking for is what happens after we break the high. Are we going to break it and retrace again? Break it, retrace, break it, retrace, and become corrective, and then just start with this corrective nature. Very possible. Or, now that we've got this large wick, are we going to just range within here, right? Also very possible. Or are we going to continue with this trend? Okay, because as you can see, I can only go on what I'm looking at currently. But if this, for example, pushes up a bit more, then that will give me a lot more information that I want to get involved in this. Why? Because we've had a large impulse, right? We've had this wick here, but the continuation of this trend, right? And the impulse is looking a lot bigger. And then I'll be looking to get involved in the bunker bar, right? But again, like I said to you before, this is lower probability. It's come from an ascending nature. But if the market offers me, if I see a large impulse and a continuation bunker bomb, I'm willing to take the 1% risk on this pair. Why? Because I know through my own back testing that when the market goes, it goes. And I want to be involved in that. And I'm willing to take that 1% risk because we're low risk traders, guys, right? It's based on my trade plan. Okay, with this pair, if I see a big enough impulse, I don't care if it comes from a descending or ascending. I'm taking the trade as long as it fits my plan. Now, what is my plan? Well, my plan is an impulse and a continuation bunker bomb, right? And I want to see a large impulse and I want to see clean price action here. I don't want to see wicks. If it comes up and gives me a large wick, I'm not getting involved. Why? Because wicks is a warning sign of a range. Now, do I want to be in a range in the CAD pairs that's predominantly range bound? No, I don't, right? So that's something that I'll be looking for on this pair. Also, what can happen is quite easily, we can just retrace. Like I said, just become ascending. If that's the case, then I'll wait for this low to be broken impulsively and then get involved in a continuation pattern, right? So the bunker bomb is here. You can see we broke that low impulsively. I will be taking that all day long. Okay, so that's currently what I'm looking for on this pair. Just be extra aware that this is a corrective pair. So if we do see large wicks up here, for example, say that we do get this push, as you can see, it's pushing right now, but say we get this large push up, right? And then we get a large wick, I'm not taking that, right? It's not part of my plan. Okay, so that's currently what I'm looking for on this pair. Next pair is the Euro Japanese Yen. Okay, and as you can see, this pair has just been very, very corrective. Okay, so we can clearly see, okay, that there's no real price action here. I'm hoping that all of you are looking at this price action and saying to yourself, that is not what I want to get involved in. Okay, because you see large wicks here giving us warning signs, right? Large wicks at the top. What does that indicate to us? It indicates that we're going to be range bound, right? What have we become? Range bound, right? Not only have we broke lows, got large wicks, we're breaking highs, creating large wicks. Do you think that this is giving you an indication we want to go down? No. Do you think this is giving you an indication we want to go up? No. So what are we going to do? Well, we're going to range, right? And that's exactly what's happened. And that's why we read price action, because it gives us this knowledge to understand exactly what the market wants to do. And it allows us to stay in or out of that market, right? Now what's happened? Look at current price action we're at right now, okay? As you can see, it looks descending. We're breaking lows, retracing, breaking lows, retracing, breaking lows, retracing, breaking lows, and retracing. It's showing us a descending nature. Right? Now, does that mean that we're going to go up? Well, as I've stated with this pair, and this is what I was talking about earlier, sometimes with the euro Japanese yen and the euro US dollar, you get this descending nature, right? And then you get an impulse, right? And for me, it happens very commonly that it's still high probability for me if I get a continuation bunker bar. Why? Because I've seen it happen over and over again, right? That sometimes you get these descending natures and then price shoots down. So I will be happy to take that because it fits my plan. Now, of course, some people only want to wait for an ascending and descending nature. And that's obviously, this is descending right now. They will only wait for a push up and get involved in that. And again, that's completely based on their back testing and their plan. And if they're happy to do that, that's completely fine. Okay, there's no right or wrong answer. I just have to explain to you what I'm looking for and what I will take, right? Now, of course, as we're seeing this nice descending nature, we're seeing a lot of wicks. It's giving me a warning sign that we're going to be corrective. So I'll be very, very cautious on getting involved in the bullet, right? So what would I look for with the bullet? Well, at the moment, I wouldn't really be looking for the bullet because it's giving me a clear sign that we're going to be range bound, right? But if I start seeing a clean descending nature, pop up, pull back to, and then go, then of course I will take that. But as the market stands at the moment, I'm only looking for a bunker bomb. Okay, I'm allowed to be picky. I'm allowed to be choosy. Why? Because I'm a price action trader. I don't have any bias in the market. The market can go up, it can go down. We wait for the market to show its hand, show us exactly what it wants to do, and we'll get involved in it. Again, this is another one of my favorite pairs that I trade the bullet. But I have to understand, if price action is giving me warning signs that it's going to be corrective, why the hell would I want to get involved in that? I wouldn't, right? And I'm hoping that you guys won't too. And again, it's just about being patient. Now, what you have to understand, guys, is that sometimes the beginning of the month may be quiet, but that doesn't mean that you have to jump into average trades. That doesn't mean you should get FOMO. You've all seen me trading now for a long time. You see the way I look at the market. And this is why I go so in depth with my price action analysis so that all of you can look at the price action the same way. Now, I'm not bothered. I'm up around 3.18% for the month so far, right? Am I bothered about that? No, right? Because I know for a fact by the end of the month, I'll be consistently profitable. And I know by the end of the month, it's probably going to be 20, 30%, right? I know that for a fact. But as long as the market is willing to offer us that opportunity, we will take it. Again, if I start seeing volatility in the market, I will just be patient because there's no point getting involved in the market when it's not ready. That just shows inexperience, and it shows that you're not waiting patiently for the market to show its hand. You're in a sense telling the market you think it's going to do something, right? We don't need to do that. We let the market show its hand and then we get involved, right? We've seen it every single month. There are always nice moves. One thing that I will say that is key in these times when we're waiting patiently is to not slack off, right? Not look at the market and say, oh, it looks corrective, I'm not going to forecast today. And then that's the day you're going to miss a trade, right? Just remember what sort of time and effort you put in, you will get back. Don't ever feel like it's a chore, right, to be involved in that. So as you can see, let me just move that down. I did see, obviously, there's a counter trend move here and we broke that low, okay? So as you can see, the high is there, okay? So what am I looking at now? Well, as you can see, what I will look for is to see whether we will get a nice move up or down. As I stated with this pair, it's high probability for me. But one key thing that I will say is if we do get a move down, what happens after the impulse, right? Because sometimes we will get a descending nature and then a push in the opposite direction. Now, why is that? Well, it's because most people will be selling this move. They won't see this descending nature because they don't trade price action. Then what happens? The market makers pushes it the other way, and then we look to get long. We don't have a bias in the market. We couldn't care less whether the market goes up or down. We just wait for it to break the most recent high or low and give us that opportunity. Okay, so one thing I will be also aware of is to see that if we break this high and start retracing, that we could go from a descending to an ascending, especially because we've had these large wicks, that we could quite easily just create a larger range, right? So it's just about being patient with the market, guys, and not trying to rush. Okay, so that's currently what I'm looking for on this pair. Next pair is the New Zealand US dollar. As you can see, the market has decided to push. So as we see, this is how we look at the highs and lows. So as you can see, if, for example, if my low was here, right? So what do I do when I want to move my highs and lows? How do I find them clearly, right? Anyone that's new to the community, what we do first is we move our lows, right? This is our low, right? This is current price action. This is the current candle. So we go on current candle and price action. Of course, this can keep pushing down, but to find the most recent high, we look at the current price action. So we look at where price action is now and we go up, right? We find the highest point and then we go back down. So as we can see from this counter trend move, that's the highest point. So that is where our high would be, right? So that's quite an easy way to do it. Work from current price, go backwards and find the highest point. Okay, that is counter trend. Now, why is it counter trend? Well, because this low, right, this candle didn't break that low, which means it was counter trend, which means the highest point would be our level, right? And then from that point, every candle broke the lows, right? Means that from this candle, we've been on a downtrend. Okay, so that's what we look for. Now, if you was to look for a bullet here, which I don't trade on this pair, you would have to go all the way up, and then you would have to look for the counter trend move. So you'd have to go all the way down. So each candle broke the low until that candle. So here is the level, right? Because that candle broke that low, but it didn't break that one, right? That candle came all the way down and then broke that high, the high of that candle, right? So as you can see, that's how we gauge the most recent highs and lows, right? Because we go back on price, find the highest point. We go back down and we find that low point. That would be the level, okay? Obviously, with this pair, I'm only trading the bot. I'm not trading the bullet. I was just giving you an example here of how to find the most recent highs and lows, right? Because obviously, as we're coming down, when it's part of a trend, it's breaking, the next candle is breaking the previous candle's low, breaking the low. That one didn't, right? That didn't break the low, so it's counter trend, right? They're breaking all the highs. Then as you can see, this next candle here didn't break that high, right? It's counter trend and then dropped, right? Every candle broke the lows, so that's the highest point. Okay, I hope that's explained it well. If not, please check the high and low video. Okay, so what am I looking for now? Well, as you can see with this pair, the market has just go from an ascending, giving us large wicks again, and then become descending. Now, as we know with this pair, it's just like a CAD pair, it's very corrective. So for me, I will just be waiting patiently because we know that what could happen here is we can create larger ranges because we've seen the information here. It's given us an ascending to a descending. That gives us a large bit of information that we could stay corrective. Now, again, with this pair, I like to see a nice move, right? And anyone that's back tested it will see that we get this large impulse and a nice continuation bunker bar, right? I don't see much volatility on this pair. So again, I'm happy to take that either direction, okay? Long or short. Doesn't matter if it comes from a descending or ascending. As long as I see a large impulse and a continuation bunker bomb, I'm happy to take that all day long, right? Because I know, again, like the CAD pairs, when they move, they really move, right? And one thing that I want to state to anyone that's new to the community, with the New Zealand US dollar and the New Zealand CAD, I want to see a large impulse, right? You will see the impulse. It'll be very obvious. So just make sure you're being very careful and not just jumping into the market. Okay, so that's currently what I'm looking for with this pair. Next pair is the New Zealand CAD. And again, we can see with this pair, if I scroll down, it's just been very corrective, very sideways, descending, ascending, descending, ascending, descending, right? Now, one thing that flags up a lot with this pair, again, like I stated earlier with CAD pairs, if I start seeing large wicks, it's given me a huge warning sign that we are just going to be corrective, because that's what this pair does. That's what all CAD pairs do. They are predominantly corrective. If I know that, I've got a large wick at the bottom, I've got a large wick at the top, what do I think is going to happen? We're going to do that. Okay, so for me, I'm not going to trade this pair unless I see a large impulse, just like the last one, and a nice continuation bunker bomb, right? Or a large impulse down and a continuation bunker bomb, right? They're the only two things I'm looking for, because I know with this pair it's predominantly corrective, so I don't want to get involved in any of that sort of crappy price action. Okay, so that's currently what I'm looking for in the market, but I do believe over the next day that we will probably just see a corrective market. It's looking that way, but again, we have to stay focused and forecasting, because I don't have any idea when the market wants to move. No one does, right? All we have to do is stay prepared and forecasting. And as soon as that market decides to move, we're ready for it. We're prepared for it. And that's the key thing about reading price action. It keeps us in and out of the market when we want to be in it. Okay, if we're looking at it right now and we can see it's a ranging, right? Do we want to get involved in a range? No, we don't, right? It's all about patience. And as you become better and better at trading and developing that art of patience, the reason I say art, because it's a very difficult thing to do, right? As a trader, you always want to be involved in the market. That's just human nature. You want to be involved in it, right? But actually developing the skill of patience is a very hard skill to develop. And once you develop that, you become a great trader. I mean, a real great trader. Okay, guys? So I hope you all have a fantastic week, and I'll speak to you all soon.